Hi, my name is Keegan Rezek and welcome to the Lending Alliance. On today's episode, we're going to look at the current market conditions for the lending landscape in Australia. I'm sat here with Paul Miliotis, who's the founder and director of the Lending Alliance, and he's going to take us through a few sort of touch points that are crucial to the market as it's sitting today. Paul, do you mind running us through a few?
Not at all, Keegan. Thank you very much. Look, we've never had a landscape in the lending market like we have or like we do at the moment. We've had APRA come in and try to restrict lending growth, which they've done a great job at it. Now that they're restricting, we've got the double whammy of the Royal Commission coming through. I believe that a lot of what the Royal Commission and APRA are doing are great. They're trying to restrict and drop the heat in particularly the Sydney market and the Melbourne market. What we are finding, it has changed how we do a home loan and what we need to request from our clients. So there's a lot more scrutiny. We've got a lot more scrutiny being put on the client's expenses. So when we're asking clients, we've got a lot more questions we're asking and a lot more toing and froing between us and clients. A lot of it is responsible lending, which I'm comfortable with. The other thing that we are seeing is there's now a disparity in pricing across lenders. So we're finding, for argument's sake, that some lenders who are more expensive in the past are a little bit cheaper now. So we are actually pricing our back book and making sure all of our clients have got the best rate and product for them. It's never been as different, I think, as it has been now. So those type of things, Keegan, are two major aspects. I suppose we can throw over to you. You do a lot of our residential lending at the Lending Alliance. Are you finding anything that is different, both positive and negative?
Look, I think the biggest thing at the moment is the Royal Commission itself is sort of, I just guess, putting more guidelines around what the banks are accepting. Now, by that I mean it's very definitive on what the parameters are of what they do require. So yes, documentation is becoming a little bit more stringent and also more detailed in what they require. But as you said earlier, that is not a bad thing. It's ensuring that the quality of the application is there and the suitability and the requirements are also there. So overall, I think it is a good thing for the space. And funnily enough, given that we are very specialist lenders and that's what we do, we're finding both yourself, myself and everyone else inside the business, we are inundated with inquiries and scenarios, very specialist, whether it's self-employed or high net worth or first home buyer. We're seeing a whole raft of things happening. But the exciting thing for me is in Sydney as well, we're seeing more people entering the market because it's maybe softened a fraction. It's allowing people to actually either bid on a place or negotiate and find a suitable property to get themselves into, which I think is good, given that I'm in that sort of age bracket.
Yeah, no, we are definitely seeing that. The pre-approvals that we've had that were there for 2 years are starting to hit. Like last month, we had a record month in terms of your first homeowners buying for our business. We are finding also a difference in the commercial and the private lending space. There's absolutely a move from your commercial and your general individual that's high net worth buying commercial property within the banking space, move to a more private styled funder, a little bit more aggressive on what they would do. We're definitely seeing, for argument's sake, your developers coming to us seeking private mortgages. For example, if they wanted no pre-sales, if they're building a block of units or limited pre-sales, or if they wanted to basically land bank, we're finding that no mainstream lender is land banking unless you've got a trading business and you can service that debt. So definitely the requirements are changing, and there are, I suppose you could say, a shadow banking system developing, significantly developing in that kind of higher net worth space.
So I guess, look, the overall takeaway is, I think, look, things have changed, but there's definitely still lending to be had for people. With the volume that we're seeing, there's still plenty of things happening, whether it's inside Sydney or outside other major cities. We obviously operate in Melbourne quite heavily and on the eastern seaboard up north too. So things are still happening, but people are wanting a specialist broker like us to make sure that what they're doing is going to happen. That's the biggest takeaway that I'm currently seeing.
And look, also in your residential space, you are definitely finding, again, certain lenders lending you more and certain lenders lending you less. So what we're finding is it's a lot more work for us, but it's great because people are valuing our service and not just walking in expecting to get what they want from a bank and paying more than they should be. So we're finding that as well.
Now, touching on, obviously, Paul's been in this industry for 15 years, I guess, at the top of the game. So you've seen different moments in our economic past and what's happened and the different, I guess, landscape as it is. Where we are currently, obviously the Royal Commission is continuing for some time just yet. Where do you see things going from here? Do you have sort of any, I guess, maybe the word prediction is a little bit hard to predict. We don't have a crystal ball, but what do you get the feel for going forward?
Look, I see a lot of pressure in particularly Sydney and Melbourne in terms of price pressure. For argument's sake, it's not, you don't have to be Einstein to figure out that, for argument's sake, when you could borrow $1.5 million 6 months ago and you can only borrow $1.2 million, for argument's sake, now, that something's going to give. So I do believe that there's going to be a price shift across the board. There's going to be a little bit more of a normal price bracket forming. Is that bad? Well, it can be if people are overly geared, expecting to get your prices that you did in the peak. So you need to be mindful of that. I definitely see that there's going to be a softening, but hopefully it's going to be a soft softening and not a complete crash. Which I don't see. I don't see a complete crash, particularly in Sydney and Melbourne, but I definitely see a softening in prices.
And look, I guess, and on that note, the banks themselves are really sort of being quite competitive with fixed rates in particular, and you might have mentioned that a little bit earlier, but I think the thing is the lenders have certain types of appetite, and we see that certain banks, and I think that's the funniest thing when people come to a broker, is they don't realise that certain banks want certain clients. And if people are walking direct to a bank, that might not be a suitable bank for them. And I think the thing for us is we're always having to keep abreast of what's happening, because it is an ever-changing landscape, and making sure that our clients, past and present or even future, are going to be matched with the right lender, I guess.
Look, absolutely. And I think that comes through education as well. So all of our staff have graduated from university. Not saying that that makes a difference to everybody, but I do believe in the financial services industry. If you've done an accounting and finance degree, you're at a better education level to put clients into different structures that will benefit them. And I think that's our advantage here, is that we're all highly educated and on top of their game in terms of that. And I think in this market particularly, you need to be at the top of your game to match the client with the best lending package. I think that's an absolute requirement.
So look, I think that pretty much sort of draws, I guess, a little bit of a market recap and where things are sitting at the moment. Really appreciate you taking the time to watch this video. If you have any further questions, both Paul and myself are contactable very easily. I'll make sure that our details are shown up on the screen, so you can feel free to reach out to either of us should you have any further questions. Once again, we'll see you in the next one.
Thank you very much.
Bye.
Thanks.